Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to do this week's market prep video for the week of May 31st. Got a lot to talk about, not a lot of time to do it, so let's kind of get right into it. Last week in the market saw basically a bunch of ho-hum, nothing here, nothing going on, nothing to see here. Didn't really drive the market that much. It's really kind of just holding its same old pattern that we've really kind of had over the course of the last few months. As you can see, you got support still constantly increasing here. Resistance increased just a little bit. Didn't get the breakout that we expected last week, or 2 weeks ago, I should say. So I'm a little, cautious over here. I still think this is a theta type of market, day trading type of a market. Swing trades right now aren't that good, and long-term investments haven't really done anything in the better part of the last 6 months, unless you're talking about specific stocks out there. So, riding cover calls, naked puts on the commodities. I still think that's kind of the market here. We really didn't see anything coming out of the G7 meetings. There was some more indications that the SDR, the special drawing rights that the IMF uses for their bond market to funnel money throughout the entire financial world. There was some more chatter that the U.S. was thinking about allowing, not allowing, it's not just their call, but, in the inclusion of the Chinese renminbi into the SDR valuation, giving the Chinese currency even greater, flexibility and responsibility out there in the foreign markets. So we saw that coming out of the G7 meetings from last week. We also saw coming out of last week, basically the entire industrialized world talking about how to stave off the next recession and really kickstart the engine of not only the U.S. economy but the world economy. The economy is out there really struggling, and trying to find some solutions out there has been daunting, because what the central banks have done hasn't exactly proven to work. And I believe we have enough evidence to suggest that, with the 200 trillion yen being printed, 4.7 trillion dollars, 1.1 trillion euros being printed over the last few years, over 530 different interest rate cuts in the last 6 years, 30 interest rate cuts just this year alone. So obviously that hasn't kickstarted the world engine, and I think we've had enough evidence to prove that it doesn't work. So maybe we can come up with another solution, but until we hear from them, it's going to be a little more difficult. Now, regarding the U.S. economic reports last week, durable goods orders came in on Tuesday, and on Tuesday of last week, that was May 26th. So let's just kind of go ahead and look at May 26th here to kind of show you how the market responded to both durable goods and consumer confidence. On Tuesday, durable goods and consumer confidence came out at about this point right here, with durable goods coming in at 0.5. The expectation was 0.5. You saw an initial movement to the downside, but it wasn't until consumer confidence came out, CB consumer confidence, that came out right at this point right here, as the market is kind of going down here. So at about this point, consumer confidence comes out, and it comes in right at about the expectation. Nothing really to see here, but the market continued to move down. G7 was on Wednesday, Thursday, and Friday, but we did have preliminary GDP data coming in on Friday, and what we were expecting with preliminary GDP was actually a negative 0.8 on Friday, and that came out at 8:30 a.m. Eastern Standard Time, which is this right here. Came in at a negative 0.7. Cheer for the U.S. economy at a negative 0.7, and as you can see, the market sold off right there with that GDP data coming in. A little bit better than they expected, but still a pretty bad number overall when you look at the GDP data. Now, in terms of the economic reports this week in the market, we have ISM manufacturing data coming out on Monday. 51.9% was a forecast. Anything above 50 shows an expanding manufacturing. Anything underneath 50 shows underneath. We're really looking at stagnation from a manufacturing perspective. And then we start our unemployment week. Our unemployment week starts with the ADP non-formal payment employment change on Wednesday, trade balance on Wednesday. OPEC meetings. If you're trading oil in the energy sector out there as a whole, the OPEC meetings are starting on Friday. My personal expectation is they will not do anything. I do not see them cutting back on the supply or increasing the supply. I think they're going to maintain at their current levels with the supply of oil coming out of the ground every single day, selling out to the open marketplace. So I really don't see anything happening with OPEC this week, but it should be a fun little event on Friday. And then we have the unemployment rate, which is probably the number 2, 3, or 4 most important economic report, just depending on what you're looking at, and that comes out on Friday. The expectation is 5.4. I see nothing in the data to suggest that we should not maintain a 5.4% unemployment rate over the course of the next month or so far. Now, in terms of the marketplace, we already looked at the S&P 500. Let's look at crude oil here. Crude oil is in a short-term bullish uptrend, intermediate downtrend. We're starting to see a little bit of a stall out here on crude oil, really struggling right here at the $60 mark. I still think the name of the game on crude oil is selling put options on USO, generating positive cash flow. Had a great day on Friday, obviously kind of succumbing to that a little bit on the open of today, but I don't see anything in this picture to suggest that we're going to move one way or the other. I think it's going to be volatile. I think it's going to be a little bit of an up, a little bit of a down, but overall, I think naked puts are the way to go. Naked puts, covered calls, crude oil, offsetting risk by selling of the selling of the put options, selling of the call options, and so on and so forth. Last week in the market, basically my assessment was, right here was last week, and I basically said, you know what, you're at that kiss of death level on the dollar index, but I saw a lot of movement, a lot of positive things in terms of the dollar in relationship to some of the other economies out there, and I did foresee that the dollar was going to win that battle. As you can see here, kind of drove back up in price on the dollar index. It did phase off just a tad here at the tail end of the week, so it came in, broke out really good, and then just kind of phased off. I like the dollar at 97. I'd like the dollar at 96 and a half. I think you're going to retest this $100 mark, just based on what I see out there. And if there is no Greek deal this week, and that's going to be in the headlines quite a bit, but if there's no Greek deal this week, look for that dollar to continue to rise this week. Because if they start missing IMF payments, which can be postponed until the end of June, they are due this week. If they don't make some type of deal between Greece, and I don't buy it, we see headlines, they're near agreement, and near agreement, near agreement. I just don't buy it. I've seen this way too long. Greece is so far in debt right now with their creditors that there's really not much they can do with it. And the number one creditor is the European Union, who basically Germany is saying nothing to see here, guys. We're not going to change our stance. Schwabel is coming out and basically, given the prime minister or the finance minister of Greece chocolate truffles to ease his pain and whatnot. It's getting comical to a certain extent with the Greek situation. But I'm not saying a deal won't happen, but I don't see it happening until last minute, and probably the deal that will be announced isn't a solution to the austerity problems in Greece or what the European Union is trying to do to Greece. It probably isn't even a restructuring of their debt burden in Greece. The most likely scenario is basically the payment plan that the IMF is needed here in the early part of June will be pushed out to later June, and that's kind of what I expect. And more than likely, the markets will cheer a solution to a non-solution to a problem that is much bigger than any solution they could possibly fathom with. So the markets will probably cheer that. So my bias in the market, given kind of everything I'm seeing out there, I've really kind of got a neutral bias right now, but a slightly bullish portfolio in that capacity. I'm looking to maintain positive theta, maintain naked puts on the commodities. Obviously I'll come out with the forex report for tackle trading tomorrow to do my personal currency trading out there. But for right now, guys, it's par for the course, and I don't see anything happening this week in the market that could dramatically, shift what the trends of the market has been doing over the course of the last last 3, 4, 5 months. Look for some more fade, look for some more whipsaw, and look for some testing of 2100 in the market and up to the top of 2130. This is Matt Justice for Tackle Trading. Hope you liked the market prep video, and if you did, go out there and tell your friends all about us over there at Tackle Trading and help us get people to control their lives one trade at a time.